Hey, what's up, my friend? So welcome back to this week's market analysis, right? It's good to have you once again, and just to share with you, what happened recently is that yesterday I attended one of my army buddies' wedding, right? So at a wedding it's great because it's about, I don't know, 8 years since I completed my national service, and always, whenever we have at such gathering, it brings back the old times, on how we sort of suffered in our army days. We climb mountains, we jump out the plane, we had endless march. So all these memories all just kinds of come back and put things in perspective, right? I guess my point being is that there is more to life than just trading. I know you're probably watching this video each and every week. Trading means the world to you, but there is more to life outside of trading. Your family, your friends, loved ones, relationship, friendships. I think these are all really very important. And if you think about this, right, when you eventually do leave this world one day, which we all will, the thing that we leave behind, or rather the most important thing that matter to us, is probably your friendship and relationship, your memories, right? I don't think trading will be at the top of your mind, when you are about to leave this world. So that is just something to share with you, right? Okay, so anyway, back to this week's market analysis. I want to talk about three things, right? First thing is a euro pound trade that I took. I want to explain to you my thought process, the entries, stops, and exits. The second thing I want to talk about is a potential trade on this metal, right? The chart looks pretty ugly right now, but I am bullish on this and I want to explain why. And last but not least, I want to talk about this candlestick pattern, right? Some of them call it the a hammer or shooting star, pinbar, whatever. You get the idea, right? So I want to talk about how most traders make a mistake while trading this. I believe I covered that a little bit last week, and this week I want to go into more in depth regarding trading pin bars and stuff like that. Okay, so all this and more in today's video. I'll see you there. Okay, so the first chart that you're looking at is platinum, right? This is platinum futures, and to me, right, things are looking pretty interesting, right? That is setting up right now. If you look at this, let's just zoom out a little. Okay, just a quick tip, right? Often when you are not sure what the big picture is doing or what the current price action is, just zoom out your screen, right? Look at the big picture. Just take a step back, and you kind of get a clearer message of what the market is telling you. So this one is quite straightforward. Platinum, right, is within the range, right, over the last 1 year between the 1030 level and the 890 level. So you can see that right now, once we have a big picture view, you then can zoom in and focus on what it's doing right now. And if you notice, platinum is basically near the area of support over here. But for me, right, this is not at the most desired level, right? Because the best level to be trading this off is at this 890 level, right, somewhere here. So my guess is that looking at this price action, I'm sure there will be traders who are enticed to go long, right? After all, they look at this consolidation, a bullish pin bar, close higher. Some call this maybe a fakey setup, and they would go long. And where would they put their stop loss? Chances are, I'm guessing, right, two levels. One is below this low, and another one is possibly below this low over here. So for me, right, I'm not in this trade, but how I'm looking to trade this particular setup is to let this group of traders get flushed out of the markets, right? Meaning they get stopped out of their trades. So what could possibly happen, right? This is something that I would say envision, is that the market could potentially maybe just trade higher a little bit and then continue trading down lower, flushing out this cluster of stops, and then finally close back higher again, closing near the highs. So this is somewhat like a price rejection. Price came down lower, triggering this cluster of stop, and then it closed bullishly higher, and then finally closing above this area of support. And if that happens, I'll be looking to go long on this trade. Okay, so let's just take things a step further. How would I set my stop loss? So for this type of trades, right, it will be more of a swing trading trade for me. Why is that so? It's quite simple, right? For all my trend following trades, I typically like to trade when the price is above the 200 period moving average. But in this case, clearly you can see that the price is below it. So for me, I'll just take a swing in this trade. If the setup does happen, let's say it triggers lower, close somewhere here, right? I'll look to get long. Stop loss will be 1 ATR, 1 times the average true range below this low. Okay, and first target will be somewhere here, this over here, right? Will be a potential level where I'll look to take profits for this particular trade if it happens. So platinum, right, I would say this is definitely a market worth paying attention to, right? Notice this area of support has been it's a very obvious level, right, over the past 1 year. Okay, so moving on, right, the next one I want to talk about is Euro Pound. This is a trade that I've actually traded. So I just want to share with you my thought process behind it on why I took the trade. So if you look at this Euro Pound again, we can just zoom out a little. If for those of you who prefer, you can use the weekly chart to get a big picture view. But for me, in this instance, I'll just zoom out a little and let you see what the market is doing. So it's quite obvious that this is pretty much in an uptrend, right? If you just pull out the 200 period moving average, the price is above it. Right, on top of it, right, the 200 period moving average has this confluence of this area of support. Okay, so now clearly you have two things going for you. Number one, the trend. Number two, it's trading from an area of value, right? Because this is an area of support and the confluence of the 200 period moving average. The third thing is, what is the trigger, right? So I think trigger is something that a lot of traders are always, sort of struggling with, right? Rayner, what is your entry trigger, right? How do you enter the trade? What is your entry? So a lot of times they're all just, concerned with the entry in it itself. But really, the entry is not, say, the most important, right? You still have to take into consideration first the trend and whether it's from an area of value. If you're, someone who likes to trade pullbacks, the trigger is only the third thing. And it's not the last thing. You still need to think about your trade management and your risk management. So you can see that, there are a few pieces to the puzzle and you really want to nail all aspects of it and not just the trigger. I'm not saying it's not important, but it's just one aspect of the equation. Like, the famous equation, right? Let me sidetrack a little. Y equals to MC squared. I think this is the formula, the equation, right? So it's like, paying attention to the M without looking at the C and the square, right? Doesn't make sense, right? So you have to look at it as the whole equation in and itself. Y equals to MC squared. Okay? So with that said, let's move on, right? So what is the entry trigger for this trade of mine, right? It's quite simple actually. It's actually based on a 4-hour time frame and trading the breakout of the build up. So if you notice on the 4-hour time frame, okay, we have this area over here. Okay, this area of resistance. Right, and after which, right, the price came back into this level and starts consolidating near the highs of resistance. So if you've, watched, some of my previous videos when I talk about breakouts, right, I say that, it's better to trade breakouts with build up. What is build up? Build up basically mean, right, consolidation. That's what I mean by build up, right? So this portion over here is a build up. Why do I want to, look for this? If you think about it, it's quite simple actually. If you think about this, right, traders will see this as a build up, and there will be traders who are, oh, price is at resistance, I'm going to short this market. So they go short this market. And where would they put their stop loss? Oh, you study courses and textbook, you should put your stop loss above resistance. So they put their stop loss somewhere here or somewhere here, right? So you just imagine this, right? Stop loss get accumulated above these levels over here. So these are essentially buy stop orders. Right, buy stop orders, because if you are short, right, to get out of the trade, you have to put a buy stop order, the opposite direction of your initial trade. So this is a buy stop order. So as it accumulates more and more over time, imagine what happens if the price pushes above this area. This stop orders will get triggered, right? So if more buy stop orders get triggered, the order flow will push the price higher, which is what you got over here, right? The price, got pushed up higher. I'm not saying that this will work every time, but generally this is the concept, or rather the idea behind why I trade breakouts with build up. Right, so this is how I entered the trade. So where did I put my stop loss on this trade? I basically had one ATR below this low, a little bit more conservative, right? So that's it, right? You don't have to put the same level as a stop loss compared to me. If you're more of a shorter term swing trader, you can reference this point, to put your stop loss as well. Maybe somewhere here. Okay. So for targets, right? This is a swing trade that I'm doing. So where I'm looking to take at least something off the table is at this highs over here, right? Why this highs? Again, it's quite it's because, right, this highs, everybody can see it, and there will be traders who are looking to short the euro pound. No matter what, they are just simply counter trend traders. They just like to go against the trend. So where would they look to establish a sensible short position? Well, at this highs, right? Because this highs is a potential level where selling pressure can come in. right? And they can just reference this high and then set their stop loss. So I would expect, selling pressure to come in around this area. And I don't want to, to take profit, right, at the absolute high over here, right? I'd rather be conservative a little bit, give some, don't try to take every penny out of the market. If it comes to this level, I would say this is a good level to potentially take something off the table, maybe half, or for those of you who want, you can even take, the entire position of this around this area of a resistance or swing high. Okay, so this is the euro pound trade that I've taken. Right, doesn't always work, but this is the general idea, behind why this build up and the breakout of resistance serves as my entry trigger. So moving on, right, the last thing I want to cover is Aussie dollar. So Aussie dollar, a few things to share over here. So this one over here, generally, we can agree the trend is up, right? Price is above the 200 period moving average. It came into this area of value. And if you think about this, right, it's very similar to the euro pound trade I've just shared earlier. In fact, it's like near identical. But why didn't I enter this trade compared to the euro pound which I entered? Right? So just spend 5 seconds and think, why Rayner didn't enter this trade. Okay? Tick tock, tick tock, tick tock, tick tock, tick tock. Okay, 5 seconds up. So why? Let me explain why. So to be honest, right, I know of traders who got long on this trade. Let me share with you their thought process. All right, they'll look at this trade and they say, oh, trend, value, hey, bullish Pinbar. All right, this is an entry trigger. Take the trade, right? So the thing is, right, let me explain to you, right, why didn't I, use this as an entry trigger? So this really boils down to, reading the price action of the market, reading the market, the price action, I would say. If you look at this bearish move coming down, right, notice the strength of it, right, the large bodied candles, right, with a strong momentum coming lower. And then this bullish pin bar appeared, okay, and you go long. So I can, give you this analogy. Let's say a train is going at 200 miles per hour, a train traveling at 200 miles per hour, right? And then at the opposite end of the train, opposite end of the track, there is another train, right, a smaller one, and it's moving at 50 miles per hour. And then they are going to collide. And when they do collide, let me ask you, is the train at 200 miles per hour going to crash and burn, or the one at 50 miles per hour going to crash and burn? Chances are it's this one over here, right? Because the force that comes with this smaller train or slower train isn't more than this train that is going at a higher speed. And the same analogy applies here, right? Imagine this selling pressure is the train going at 200 miles per hour. And this small bullish pin bar is going at 50 miles per hour. Would you want to be with the 50 miles per hour train? Right? I sure as hell wouldn't want to do that, right? So be aware of this, right? That, you can use this train analogy to kind of think that, whether, you want to be taking that particular setup or not. Okay, so what is one way to, to go about it, right? Notice there's another one over here, another bullish pin bar. And again, right, the size of it is relatively small, right? So basically, you can see that those who are long are probably stopped out already or about to get stopped out, depending where they put their stop loss. So how would you, sort of like, classify whether that particular reversal pattern is something that you want to trade? So again, for those of you who have read my pin bar trading strategy guide, one thing I mentioned is that you can use the average true range indicator as a guideline. Okay, so let's say I'll just adjust this to, it doesn't matter. Let me just do this. Okay, so you typically use 20 period and the simple moving average for my ATR settings. Okay, so with that said, right, first and foremost, what you want to do is ask yourself, what is the average true range of this market at this point in time? So if you look at it, it's currently around 70 pips. Okay, that's the average daily range. So one tip to share with you is that if you want to trade this type of, individual candlestick reversal patterns, look for a pattern that is at least 1.5 times the average true range. So what this means is that the range of your, say for example, this pin bar over here is to be at least 1.5 times the average true range. So since now the average true range is 70 pips, 70 you multiply by 1.5, Rayner, the human calculator, will tell you is 105 pips. Wow! Is that fast or not? Right? Okay, so just let me toot my own horn. It's just a primary school math. So 105 pips, right, is the range that the reversal candle should be to tell you that it has some conviction or significance behind it. So basically, this 105 pips is telling you that it is on the same level as the 200 miles per hour train, right? I am, I am this big as well. I am this strong as well, right? Don't mess with me. So this 1.5 times ATR sort of like, give you a quick, I would say a run through guideline. So clearly, right, if you're looking at 105 pips as a range of the candle, and if you compare to this candle over here, this one over here, I just did the math, right? If I'm not wrong, right, this one is about, the high is 7860 and the low is 7799. So that's about 60 pips, right? So the range of this entire pin bar is about 60 pips, nowhere near the 105 pips that we were looking at. So this is one very simple way to tell you that whether this pin bar, or rather this reversal candlestick pattern, has any significance, right? Clearly, in this case it doesn't have, and just skip the trade, right? No harm done. Okay, so I hope this helps, right? This is a very useful technique to kind of filter out high probability and low probability trades. Okay, so with that said, right, this is just something to share with you, because I think it's important not just to share with you winning trades, but also losing trades and the thought process, right? Why behind certain trades work and why certain trades don't work. Okay, so with that said, I have come to the end of this week's market analysis. So just do a super quick recap. Number one, I talked about platinum, right? I would say that it's coming towards an area of support, right? Looking to get long if the setup presents itself. Second thing I talk about is the euro pound trade that I took, how, when, and why. And the third one is Aussie dollar, a trade that why I say that it wasn't a good trade to start with. Okay, so with that said, all right, I wish you good luck and good trading. If you have enjoyed this video, please hit the subscribe button and the like button. So it's great feedback for me to know that what resonates with you and what doesn't. Okay, so with that, I wish you a great week ahead, and I'll talk to you soon.